It's not every day you hear about a country racking up like a massive $346 billion tab, and the solution isn't some, international bailout or a sudden boom in exports.
Right.
What if the answer was actually in the hands of its own people?
Mm.
That's the situation that's happening in India right now. And stuff you sent me it's a really bold financial strategy, and we're going to dive deep into all of it today.
I think what's so interesting about this is that it really is a shift in how we think about um, how a major economy is handling its financial obligations.
Yeah.
We're so used to thinking about governments relying on, big institutions
Yeah.
or foreign investment.
Right.
But this is really, as you said, leveraging the power of its own citizens
Yeah, and on a huge scale.
on a grand scale.
It's essentially saying to its people, hey, we need your help to refinance this huge amount.
Yes.
29.7 trillion rupees.
Wow.
Which is a mountain of maturing sovereign bonds over the next 5 years.
Yeah, that's a lot of money.
So how did they get here? Like, how did this all come about?
Well, I think if we zoom out a little bit and we look at this sort of broader picture,
Yeah.
the pandemic obviously had a huge impact.
Yeah.
And on top of that, India has been pushing for major infrastructure development.
Right.
And both of those have led to more borrowing.
Yeah.
And so the government, along with the RBI, which is India's central bank,
Right.
they came up with this plan to swap old debt
Okay.
for longer-term bonds.
So this is where it gets really interesting.
Yes.
The people buying these bonds aren't these huge international funds or big banks.
Right.
It's everyday Indian households.
Exactly. It's really fascinating.
That's a big deal.
It is.
So why are so many people, why is there this demand?
Well, India's middle class has been growing like crazy,
Okay.
and a lot more people now have more money
Yeah.
to save and invest. And at the same time, people are also becoming more financially savvy,
Oh, interesting.
and they have more access to different ways to invest.
So that's all playing a part in it. So it
Yeah.
sounds like government bonds are a pretty good option, especially the ones that are for a longer term.
They are, especially compared to, the fixed deposits that banks offer.
Okay.
They seem to have better returns.
Mm-hmm.
And the risk is much lower compared to something like the stock market.
That makes sense.
It's really about people wanting a safe and stable place to put their money and see it grow over time.
It's like peace of mind.
Exactly.
So how does this all fit into their long-term plans?
Well, one expert, Suryajit Neogi from India Ratings,
Okay.
he was saying that there's this growing preference among Indian households for longer-term investment.
Gotcha.
And these bonds are perfect for that.
Makes sense.
It's not about just making a quick buck. It's more about building that financial security
Right.
over time.
And we can't forget about the big insurance companies and what role they play in all this.
Oh, absolutely.
The LIC, which is huge.
It's massive.
They even had this idea about issuing bonds that would last for 100 years.
100 years.
100 years.
Wow.
That's long term.
That is long term.
So what's the thinking there?
Well, insurance companies, they need to have assets that last a long time
Okay.
to match all those policies that they've issued.
So those long-term bonds, they're like a perfect fit.
Exactly.
They need that stability.
They do. And there really aren't many other options that are as high quality and long term.
Okay.
Ajit Banerjee from Shram Life Insurance said the same thing.
Yeah, so it makes sense that they're buying up these bonds.
It does.
So the government's goal here is pretty ambitious, right?
It is.
They want to swap 2.5 trillion rupees of debt in just one fiscal year.
It's a lot.
It is a lot, but the insurance sector is growing super fast, 12 to 13% every year.
Wow.
So, it seems like it's actually possible.
It does. And, Vidya Iyer from ICICI Prudential Life Insurance,
Yeah.
she seems to think it's achievable too.
Well, that's good to hear. What about the early results of the swap?
So far, they've been positive.
Okay, good.
The government's borrowing costs have gone down by about 20 basis points, which is 0.2%.
Yeah.
And they've managed to make the average maturity of their debt longer.
So that should help ease some of the immediate pressure.
Definitely gives them some breathing room.
Yeah. It's almost like all this demand from households and institutions has calmed down those, what do they call them? The bond vigilantes?
Bond vigilantes, yeah.
Yeah.
I know exactly what you mean. Those big investors that panic and start selling bonds
Yeah.
if they think the government is borrowing too much.
Right, which makes interest rates go way up.
Exactly.
But it seems like that pressure has eased up a bit.
It has. It seems like it's given the government more room to, focus on their spending priorities.
Like infrastructure
Right.
or social programs,
Yeah.
without having to worry too much about the bond market freaking out. Yeah.
But there's this other thing, right?
Yes.
The state governments are also borrowing more.
Right.
And to get people to invest, they're offering higher returns on their bonds than the central government.
They are. And that's what A. Prasanna from ICICI Securities was pointing out.
Yeah.
It might make it tougher for the central government to keep those interest rates low.
That's a good point.
It's almost like this competition for the same pool of investors.
So we'll have to wait and see how it all plays out.
We will. It'll be interesting to see what happens when both the national government and all the state governments are trying to sell tons of bonds at the same time.
Right. But what about the future? What do the analysts see happening?
Well, the forecasts for India's insurance market are really positive.
Oh, really?
Yeah, analysts at Swiss Re, they think it's going to be the fastest growing among all the G20 nations.
Wow.
In the next 5 years.
Okay.
And a lot of those premiums that people pay for insurance, they end up getting invested. So that means insurance companies will probably keep being big players in this government bond market, right?
It seems like it.
Okay.
Vindhya Iyer, she said something really interesting.
Yeah.
She said that this demand for long-term bonds is probably going to stick around.
I see.
And insurance companies are going to be a big part of what determines the yields on those bonds.
That makes sense. It seems like this whole thing with Indian households indirectly financing the government's debt through their insurance and savings, it's probably going to continue.
It seems that way.
So at the end of the day, India is placing a huge bet on the power of its people to manage this mountain of national debt.
They are.
And the growing middle class, the extra income they have, and how attractive these government bonds are, it's all part of this huge shift.
Exactly. And when you think about the LIC, considering those 100-year bonds, it just shows how long-term this strategy really is.
It does.
Like Soumyajit Yogi said, those bonds are perfect for what Indian households are looking for.
We also looked at the government's plans to swap all this debt.
Right.
And how it's already helping them to lower their borrowing costs and spread out those payments over a longer time.
And that's something Vijay Iyer really emphasized too.
And let's not forget about the insurance company.
Absolutely crucial.
Like we talked about earlier, they really need those long-term assets to balance out all those insurance policies they have.
It's fundamental to their business model.
Yeah.
And as Tajit Banerjee explained, it's a big part of why this whole thing is working.
It's all connected.
It is.
It's interesting that this whole increase in demand from regular people has sort of quieted down those bond vigilantes.
It has, at least for now.
Yeah.
And that gives the government more flexibility.
For sure. But then there's the whole thing with state governments also borrowing more.
Right.
And having to offer higher returns to compete.
And as A. Prasanna pointed out, that could make it hard for the central government to keep rates low down the road.
So that's definitely something to keep an eye on.
It is.
But the future of India's insurance market looks really promising.
It does.
Swiss Re thinks it's going to grow super fast.
It does seem that way.
Which means more money flowing into those bonds.
Right.
So this whole trend of households indirectly financing the government's debt, that's probably going to keep going for a while.
It's definitely a trend to watch.
So the big question is this a brilliant move by India, harnessing its people's savings to stabilize the economy? Or is it just putting off a debt problem?
Yeah.
It all depends on how well the Indian economy does in the long run.
I think that's the key takeaway.
It's amazing to think about how all those individual decisions about saving money are affecting a huge economy like India.
It really is remarkable.
It's a fascinating story, and it's definitely worth, keeping an eye on how it all plays out.
Absolutely. Maybe even looking into things like how the Indian middle class is projected to grow or the long-term performance of Indian bonds.
Yeah, good stuff.
That would give you a better sense of how this is all evolving.
So much to think about.
So much.
That's it for our deep dive today.
Until next time.
See ya.
See ya.